Hey traders, Nick Shaheen here, revisiting Lucid, now LCID ticker. Last time I did this, the stock was right here. It was toying with a problem, but I mentioned that if they hold 20, whatever the base here, they have the opportunity to just hold the base and spring back up. They failed at where I expect them to fail. I will show you the boxes I drew during the last video, and they're holding true. What I can say right now, a few things, but before, if you don't subscribe to this channel, it's free still, so you can do it and set your alert so you can get notifications. And also, I will have a floating box up there somewhere for a call to action to either request your own video as far as stickers are concerned if I don't cover it, or also get into the waiting list on the chat room. Okay, so what now? My impression is, first of all, the overall market, I'm bullish into the end of the weekend and Monday because I think the Fed event, Jackson Hole that's going on right now, today is 8/26, is going to be bullish outcome because I think markets are just looking to get it behind them because we all know what the Fed's going to do. They're tapering. When doesn't really matter. Headlines will move. We've had Kabul explosions and Kaplan flapping his lips too about his taper announcement on September or something like that. Immaterial. Eventually they will buy the dip. That's what markets are doing. Until they change that behavior, I will assume up is the default direction without reason to go down on specific stocks. So this particular situation, just from looking at the chart, by the way, I'm not going to judge it fundamentally. If you watch my prior videos, you know my opinion. So I'll just say that XPEV reported overnight, and they blew up their top line 6x. That's freaking impressive. Just saying. Okay, so the stock chart itself tells me that there's a move coming, and the direction is not yet. We don't know the direction, but we can make some lines that will tell us once this line gets crossed, where is it going to go. So it's not like I'm telling you it can go up and it can go down. Of course, at any point in time, any stock can go up and go down. I'm telling you there's a lot of energy built, so there should be a boom or a bust coming soon, and we'll draw the lines that will matter. Why do I think that? Because the range tightened from here to down to a pinpoint, and it's close to a base that day, whatever happened on July 19th, I don't remember. And it's a flat bottom, and it's a descending lower high trend. That doesn't mean the bears have the advantage. It just means that the bulls are holding their line while the bears are making progress, and they're going to come to blows, and then it's going to get resolved sooner rather than later. So let me first show you the lines for the general areas that I covered last time. So this box matters from this one candle. I described it as a doji. I explained it in my prior video. You can go back to it. But the edges of it are pretty huge, right? But it's been the overhang problem area. So I can respect the fact that there will be sellers up here because they showed up, they showed up, they showed up, and that was the bottom end of that candle. So it is an important place for resistance. There's a secondary area. It's not a hard line in the sand here. And arguably there's another one slightly lower. So anywhere you look, okay, I'll redraw it fresh. Anywhere you look, there's an area of resistance when there's a descending trend like that. This is one. This is also resistance. Again, not a line, but if I were to draw a line, I'll put it right there. And there's one here, which is pretty dang close. So now we have, if you want to put a visual of how tight the action is, look at this. Now we have support and resistance almost touching each other. So now that's the tight area. So if you lose support, I think you have a secondary support at the low of 719. The low there was 20.9. So I wouldn't freak out as soon as it breaks through that line right there, which is like closer to 21. We'll zoom in to find out where, because 20.9, remember the number, is right there. Besides, there's also 19.9-ish, the base here, as good support, and even better support down here. So if the worst thing happens, I think it just falls into this base and it holds. That's It has support below the support. Now, if that base fails, that's 2 steps ahead. Now we can talk about disaster. But there is no, if the company delivers on its promises with progress, there's no reason to go down here. But this base, if we get there, panicking out would be a mistake in my opinion. And if somebody wants to go long, even me, I would consider it long down there for a trade. I like companies that have a P&L, and this one just has promises of a P&L. But legitimate company, decent looking car, and etc. So all right, so let's zoom in to see if we can see okay, that's too much. All right, so this is a 2-hour candle. It just zooms in at the lines we just drew. I'm going to drop this one to here because this is where it's a resistance area from 2430 to 25 and change. So I'm just going to put it here, eyeball. The floor is right there at 2140. You can draw the floor right there. So if it gets to here, I'm going to put an alert to look at it and say long with a question mark. Why? Because it's in between 2 support lines, one just lost and one below. So maybe I want to consider a long somewhere here to catch the falling knife. Now, technically, it's not good to catch a falling knife like this because it should come to 19 if this is lost, technically. I don't give it full credit because of this nice base, as we just discussed. So again, these are trading comments. If you're in it for years, you shouldn't be watching this video. If you're trying to find an entry point or worried about the short term or trying to trade it in and out, then these lines matter. This one I'm going to put here, 23 should be a hard line in the sand. That's step 1. Now there is an intangible study here. Notice I don't have studies on there. Very few. I have one. This red line and this red blue zone is just a regression line. I don't use it as an action, just a visual representation of a channel who's in charge. But the only study I have on here is the volume profile, these bars. So this volume profile says there's a problem around 2380 in the sense where it is a busy point for this period of time. Since May, middle of May, this is the busiest spot by a lot. So these volume bars are, they don't say anything. These volume bars are the same, only they tell me when they where they happen, at what price. So 2380 is the busiest zone, and the second busiest are just around it. Prices below that. When price is below that, it will encounter resistance from that. Meaning if it's rallying into here, it's a busy spot. It's going to hit a traffic jam with regards to trading. Buy, sell, buy, sell. It's going to hit the traffic jam and it hits resistance. So level resistance is this line. Volume resistance, overhead supply, whatever you want to call it, is over here. Another level resistance is up here. So 25 point, let's call it 25. That candle is terrible. This one left a long tail, but this one, opened and went straight down. So these are the lines that matter short term. Long term prognosis looks pretty good. The company is legit, putting in a legit effort, has a lot of good fans, as I'm sure you will let me know in the comment section how big of an idiot I am. But I know charts. And if this was an ABC company, those comments will stand true, and I guarantee you these lines will matter the way I mentioned them. So if you don't pay attention to charts, that's fine, that's your prerogative. But in my opinion, it's worth a look-see, because the experts tell us, Wall Street tells us, that machines are in charge. They do most of the trading. Well, guess what machines do? They look at numbers and history. So I establish my lines based on history. I look left and I put lines where they matter. See, I just put that line right there, right? Just out of the blue. If you chase it left, not out of the blue because of recent price action, if you chase it left, it mattered here and it mattered here. That was a top and then a base for the whole rally. And then they defended it here, they defended it twice, and they left. So lines matter. They say price is truth. This is price. It's actual data. I'm not guessing. This is actual data. I'm not guessing there will be resistance there. The data says there will be resistance there because there has been it's a heavy area of action. So when it gets there, it's not going to be butter. They're not going to do, very rarely do they do that. All right, that's it. Nick signing out.